Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the Tackle Trading Market Recap for the 11th of July. It is a Thursday. Interesting day in the market. For the most part, the bulls took it pretty easily as the Dow Jones closed above 27,000 officially for the first time. So some nice movement over in the Dow Jones. In healthcare, definitely some interesting things going on as Trump kind of dropped the plan to eliminate the drug rebates. You saw a big pop on the healthcare plants, Humana, UNH, and then the manufacturers like Pfizer, Merck, Lilly, all had a big drop. So quite a bit of movement on both sides of the aisle over in healthcare. Kind of an interesting day, a little bit of a bounce back day for some of the industrials and the basic material stocks as well. And good afternoon, Patricia. Great to see you as always. Hope you had a nice day trading. It was a weird one. It kind of just, I don't know. Maybe I was just thinking it was going to be something different, I guess. I don't know what I thought it was going to be, but as I look at this back at this day, it just seemed kind of odd. We did see, quite a bit of movement to the upside at the end of the trading days. You can kind of see here after gapping up on the open and really just kind of back and forth throughout most of the day. That last hour and a half, we had a couple of little pops to the bullish side over in the S&P, just closing right a hair below 3,000. And good afternoon, Emily. Great to see you as always. Hope you are doing well. Hope the little one's doing well as well. That's way too many wells. So you can kind of see as we're developing on the S&P 500, a pretty clear little top developing on the intraday. So pushing above that could be a little bit of a signal as we move into tomorrow. Ideally, though, you guys know me, all things being equal, I'd rather it be another day like this tomorrow and then try to break out early here next week. But we can kind of use these 2 days highs that are just a hair above that high from last week as maybe that next little push to the upside. And good afternoon, Linda. Great to see you as always. Over in the Dow, much cleaner looking candle in the Dow. It was certainly our leader here today. Big bullish candle. We always like to see that closing at an all-time high for whatever it's worth, closing above the big round number of 27,000. So certainly that bullish sentiment overall is still very strong, dancing with new highs in the broad market. Not anything too earth-shattering to report on that front. Over in the NASDAQ, holding the breakout, not a lot of movement. As you can kind of see, more of a lackluster day, after the open. We just kind of drifted, didn't really do anything too terribly wrong, but kind of drifted down a little bit. But most importantly, at least to me, we closed above that old resistance level. And as long as that is true, I'm all right with however it decides it wants to move personally. So all-time highs are knocking on the door of these all-time highs in the S&P, in the Dow, in the NASDAQ. Hard to complain too much. Did see some selling over in the rut, starting to come off of these highs that it's really been consolidating. There's still not a lot to see here, I don't think, at least, but a little bit more downward movement here in the Russell at this point in time. Still, again, for me, just keep it neutral is my philosophy. It's going to move back, it's going to move forth, but really it's done a pretty good job. We had this one, failed breakout attempt. I think I would call it at least a failed breakout attempt, back in May. And beyond that, we've really been pretty good about staying within this trading range, I think, and I'm going to continue to keep us within this trading range personally. Pulling back into this 20-day average, maybe there could be a bull pullback opportunity, but I have a hard time seeing it, at least as of right now. So that is where we find ourselves broadly, just a little bit more of the same. We did see a little bit of movement, upward movement, come back into the material sector here today. Definitely a good first start. Probably some of my favorite things for tomorrow / early next week. Without digging, I haven't dug for a lot of new things for next week. Are in the materials sector. I've been kind of watching this as a pullback. Still need a little upward movement, and I always prefer when I'm above those short-term averages versus below those short-term averages. Personally, I just feel better and I do better when I'm working with those averages. But if we are able to recapture them, certainly a nice step. We've got some interesting candidates over here if we're interested in them. I threw APD up on the Tackle Trading Twitter earlier today. When Twitter was working, Twitter went down for a little while this afternoon. I imagine the world was freaking out. But a nice little pullback developing on APD, in my opinion. Do have earnings, like so many things that we're going to have to consider, for swing trades really throughout the rest of the month here in a couple of weeks. But an interesting little pullback opportunity developing over there. On the other side of it, Ecolab's knocking right into that resistance level. Certainly something worth seeing. And of course, we've been working with CC from the stock reports this week after breaking that major support level. If we're looking for bears, there's still some out there. That is not a pretty break, I don't think, over in CC. So I'm liking where we are. I do think, broadly speaking, we need a little upward movement to confirm that the sector is ready to move to the upside. But today was a good start. I think we needed to see some buyers step in. Now let's see them kind of carry through, right? Show us a little bit of upward movement. We still kind of have to turn this intraday trend around. So a little bit of follow through could go a long way, for me at least, here in the materials sector. Over in energy, I continue to maintain that it's in a rut. It's going to do what it's going to do. Up a little hair here today. I don't know what you're supposed to do with this. It's been okay from a cash flow point of view, but I still think directionally, at least, let it come out of this range is the proper approach as of right now. It just doesn't seem to know. We're getting close. We could have some potential breaks. And actually, if you look at ExxonMobil, they're kind of knocking on a pretty identifiable level of resistance. So maybe if we do break out in the sector overall, a break on XOM, we don't have a ton of time with earnings, but we still have a few weeks on an XOM. We also looked at HP yesterday. They've been kind of the epitome of sidewaysness along with this with the sector. Again, earnings. Annoying, if nothing else, from a swing trading point of view. I like earnings season, at least the first half, and then I kind of burn out by the end. But I do get annoyed that you see a breakout of a nice sideways range, and then, there's earnings in 3 days. So good luck with that. But still, for me, we're just hanging in this into the sideways range overall. I can't really make a case strongly for or against the energy sector right now. So I'll leave it alone until we come out of that trading range. Working right back into resistance over in the financials. Again, if we're going to complain about earnings in the energy sector, we're really going to complain about it in financials with a whole bunch of companies set to report here next week. So not really much has changed. A little bit of consolidation going on broadly. We did see a little bit of selling over in some of our insurance companies today. Not really anything to be overly concerned about, I don't believe, but we did see a little more selling, in this area. For the most part, we're just kind of consolidating at that resistance level. The nice thing about a break in the financial sector overall is we do have a little bit of room to run until our next level of resistance at $29 or approximately $29. Do think we need to get that break for that confirmation, though. At this point, we spent a good chunk of time just hanging around there. Don't want to push through it. It's turned out to be a little bit of a fight. Over in industrials, still holding our own. I still don't love it. I still think we are got to be a little bit careful. This is a pretty important support level in my personal opinion. So a break's going to be a much better confirmation. But I did find ACM in the watches, a little bit of a pullback, sitting right on that 20-period moving average. So maybe there are a few pullbacks. The problem I have overall with the industrial sector is these pullbacks are not pretty. You've got a cat pullback, and I just don't like that pullback. And maybe I should, right? That is certainly an opinion. It might be a great pullback, but it's just a little too steep. Don't like the way it's behaved. You see the same things on things like John Deere. All of the pullbacks I found have just been a little rockier, a little deeper than I personally like. As long as we're holding that support level on the ETF, it could make sense to try to trade into some pullbacks if you find some that you like. I was having a hard time. I went through the industrial sector here today, at least the S&P 500 components. And there was just nothing that I thought, yeah, that's something for tomorrow to be keeping a close eye on. And I was a little surprised with it holding its own at support, but just have not really liked the way that the charts have developed. But that's just a me thing. Most importantly, support is holding as of right now. As long as we're holding, I think we keep a little bit of a bullish skew over in industrials. Over in tech, a little bit more of the same as yesterday, hitting an all-time high on the ETF, coming off of that high on the intraday, still overall very, very solid. And it's kind of the same as always. You did see some really nice movement in NVIDIA and a few of the semiconductors, but NVIDIA in particular really showing well. Nice little pop over there. We were able to hold our breakout on Intuit that we hit here yesterday. So certainly overall looking pretty nice. PayPal hit a new 52-week high. I don't really like PayPal as a swing trading stock these days, but certainly it's been a really good trending stock nonetheless. So for the most part, tech continues to be pretty strong. One of the areas that is a little maybe leading the market as of right this very second. We do have Cisco, of course. If at first you don't break out, try again, I guess is my philosophy when it comes to Cisco after trying to break out here, back in June. Really sold off, but we did hold support. I thought that was an important hold, and I still believe that's an important support level on Cisco. But I do believe this still does belong in a bullish breakout watch list. If we put it on a weekly time frame, I think it's a little bit prettier personally, but I believe it still belongs there. We did finally see a little bit of selling over an Oracle, but it's just such a hot mover right now that coming way off of those intraday lows, I wouldn't mind a little pullback maybe to the 9 on Oracle, but that might be wishful thinking at this point in time. So much as the same, tech has been strong since breaking. That break on the NASDAQ, certainly very important to tech stocks as a whole. Seeing the MasterCards, the Visas doing well. So things are looking pretty good over on the tech side of things. We did just kind of more of the same over in staples. We are kind of lining up on a little bit of a break on a Pepsi if we want it. And the nice thing about Pepsi is their post earnings, right? They had this little earnings drop here earlier this week, now working into some resistance. A break beyond that resistance would be, at least if nothing else, whether it's a tradable signal or not, certainly I would call it a signal that's confirming the upward movement of the trend. So I'm going to keep these guys on my radar for the next little while as we're fighting this resistance level. One of their big, bonuses is earnings are behind us. So a nice breakout post earnings would be all right with me, but really it is more of the same. Tyson, another one that's knocking on the door. We saw some downward movement here today, but still knocking on the door of resistance. Still have almost a month until earnings over on Tyson. So continues to be a strong overall area. You did see on the other side of things, Smuckers, SJ Smuckers, ton of selling into its support level, kind of have turned after that really just insane run above the 90 MA. I think we were talking about that on more than one occasion, have kind of turned around, started making lower highs and lower lows. Holding, right here at the support level, I would argue if we break today's low, that is a break of support. And, really technically speaking, I don't see any reason why we're not working to the 200-day moving average. We'll have to consider the overall strength of the sector, of course, but it's not all sunshines and rainbows for everything in the consumer staple sector. Overall, though, still holding up well. A little bit more upward movement could be a little bit of a signal taking out those highs. Never a bad thing. So just going to continue to enjoy that overall, but there certainly are some things that are showing some weakness in the staple sector right now. Over in utilities, it was an interesting day. Let's go to the intraday here. So we know the resistance. You guys know where my head is on that resistance. I want to see that break for continuation and looking for new entries into utilities. We really sold off pretty good off of resistance throughout most of the day. But boy, once the bulls decided that's enough for the day, just a complete 180, really strong second or maybe last third of the trading day. It doesn't take much of a reason for people to like to buy, things that are hot, I suppose. Still doesn't really change the chart. I just thought it was interesting how quick the bulls were willing to come back in. Still want to see a break. That's just me. Still bullish. just at resistance, right? That's all that it is. And until we break that resistance, I'm going to be a little bit cautious, at least when it comes to initiating new trades. A break above that, certainly a very nice signal in utilities. So I imagine I'll have a utility stock or two on the breakout list for next week, or at least I'll try to, if nothing else. Healthcare is where it got interesting. That was the interesting area. So kind of axed the plan for the drug rebates. And what you saw was a huge spike in our plans, Humana, UNH, CI. Some of them look better than others. Of course, there goes that potential breakout trade that, at least I've been watching for in Humana. We'll have to wait for something new to develop. UNH, really strong movement here today, breaking through 2 levels of resistance. Of course, earnings here next week. So that really showed a ton of strength within those managed plans, really strong response to axing that bill. On the other side of things, all of the manufacturers tanked and were pretty ugly. Merck may be one of the more uglies, but certainly a ton of selling, breaking some support, plummeting through the 50-day moving average, did come off of the lows, but still close below it on a pretty darn good spike of volume. Lilly broke through that support level. So, you look through the entirety of the manufacturers and they were all very much in the red here today, whereas the plans were very much in the green. Going to have to be a little careful now that, the market's kind of got the Trump radar over in the healthcare sector right now. So I do think we need to be a little bit careful on either side of the coin. Still open to trading in these areas. The medical devices overall held up pretty nicely today. So things are okay when we kind of step away from some of the manufacturers. Some of the big biotech companies were down pretty big here today. Plans looking great, but probably going to need some sort of new development after that huge move and gap up on the open. So we did have Baxter hanging out, kind of knocking on the door of a resistance. I'm not sure if these were stock or options reporting. Good afternoon, Lauren. Great to see you as always. I think they're probably options report, but don't quote me on that. Still knocking on the door of a potential break. So certainly, some interesting areas. The medical equipment device type companies, they seemed relatively unbothered because it is really focused on the drug. So that's going to impact the drug makers and those healthcare plans that are, purchasing those drugs, right? So those areas probably should expect maybe, I don't know if it'll play out this way, but I think we should probably expect a little more volatility in those areas of healthcare at this point in time. There's going to be bulls, there's going to be bears. I think you really have to like a breakout that looks like this on Baxter, but I think you have to like a breakdown on something that looks like a Lilly. Of note, though, and I just have to bring it up, because, well, you have to do it when it happens. We did gap up above that resistance level in CVS. As you can see, we came well off of those highs. No one really believed, but we did come out of that range finally on that news here today. I don't really think you do anything with this at this point in time, but maybe if we can kind of build a floor and gain a little confidence that this is a breakout. That is a breakout, right? I just don't like the way it looks. I don't like the way the price behaved, but a little bit of a double bottom when you look at this weekly chart. That is a little bit of a reversal candidate. I just think we probably need a little bit of price action to settle in before we get too crazy. But I did have to bring it up. They've been sideways forever. I'm almost the touch of death. I think I brought them up like 2 days ago. What's it going to take to get out of there? And there they go. I did the same thing with, I think it was Insight back last year. Been sideways for like 6 months. I brought it up, and then literally like 3 days later it broke out. So I'm going to start shutting up about things that are stuck in sideways ranges. Apparently I am the kiss of death for the condor traders there. As you look at how it impacted our ETF, we've got a very clear, I'm just going to come steal something over here, developing a very clear top of resistance. Probably need to break that for that next signal. We are creating higher lows. So if we can kind of continue this and then break through, maybe can be something there. But I think with the kind of the highlights on it right now, we do need to be a little careful or at least expect increased volatility potentially over in the healthcare sector. Certainly the most interesting area today in my mind. Over in the discretionary, just another day, just another all-time high for the discretionary ETF. You did see Amazon sell a little bit, but still closing above 2,000, certainly not a tremendously bearish signal, but a little bit of profit taking over there. So much of the same as we've seen, time and time again. As of late, I know a few of you. I saw that you were, Cody, and I think Randall and Emily. I think all of you guys were short here on our old friends L Brand. Certainly, they're doing you a solid. Not afraid to move tremendously down. We didn't get that pullback. I know Jimbo brought up lows here yesterday on a pullback. We actually could probably argue that it's a little bit of a breakout candidate now. Maybe we wanted to see a pullback, but probably, at least as of today's candle, looks like we're much more likely to get at least to try to push through that resistance. So things, again, over here, I don't know what to do, is just other than say very strong. McDonald's did come well off of its highs today. Not really much to see here, still well above the 9 EMA, but did sell off quite heavily at its highs. Of note, Home Depot, of course, continuing to just rock and roll after breaking out. Always a nice sign with the strength of the sector. So again, just it's very bullish. Even, there's always some LBs, and they're usually the LBs. It's the same cast of characters. Nordstrom's hit another 52-week low here today. They hit one yesterday, hit another one here today. So they're certainly, the same old cast of characters seem to be showing the weakness, and the same old cast of characters seem to be showing the strength as of right now in discretionary. Did see quite a bit of selling over in the REITs today. A little bit of a pullback. We're approaching that resistance. Makes a little bit of sense. Got some overhead. Some people are just naturally going to lock in profits at resistance, right? This is a trend level of resistance, but it is still, we know for sure that we did see a lot of selling when we got there before. So a little bit of selling here. No reason to believe, really, based off of today's candle, we have to rush back in or that we should turn to be bears in my mind on real estate, but probably need to let something new develop for any new trades, at least broadly speaking, to shape up over in the REIT. So we'll kind of let that one develop over the next few days, see what we can get. And XLC, not a whole lot. We did move up a little bit, but not a lot of great follow through off of yesterday's candle. Nothing really earth shattering. A little bit of profit taking in Facebook. Another day, another close above that 50-day moving average for Google. Definitely nice to see. You've got Comcast breaking out, got earnings in 2 weeks, and that's my biggest concern with Comcast. I actually really like the way we've developed. Nice level of resistance sitting there for 2 days, but Comcast is slow. They're not a fast-moving stock, at least in my definition of a fast-moving stock. Earnings in 2 weeks, probably going to have to let this break go. For me, at least, I don't think we can work anything there. Disney, not a lot of movement, a little bit of a gravestone type of candle, but again, most importantly, closing above that breakout point. So much unchanged. EA working back a little bit towards that support as it kind of ran into those moving averages. I don't know if you're supposed to do anything with EA. I know I'm not, but certainly a little bit of resistance forming over there. So looks like a little bit of a breather. We are continuing to see more things look decent than not, in my opinion, within the communication services, but really pretty unchanged off of where we were here yesterday. So that is where we find ourselves in the sectors. The healthcare stuff is going to be interesting. Maybe it's just a one and done deal, and we can kind of get back, in relatively short order to business as usual. Until I'm comfortable with that, I'm going to kind of be a little bit cautious. But like I said, it's really going to be focused, over in the pharmaceuticals and not so much over in the things like the device companies. They seem like they really didn't care. Breakout on Baxter or something like that could certainly be in play for me, at least going forward. Over in the VIX, not a lot to see here today. Just, we're hitting an all-time high in the market. It's hard to think we're going to see a dramatic spike in the VIX when we see that. Gold and silver remain volatile within, gold within this current trading range. Did have a really nice run following through yesterday's candlestick, but as you can kind of see, that gave way and we sold back off. Honestly, I think right now, if we're trying to trade this and not cash flow it, I think we need to let it at least until something new develops. I think it's probably one of those, we've got to let it come out of this trading range. Now, something may develop between here and there, but it is volatile. It's moving fast. It's pretty tough for swings right now. You have to be very fast, on the buy signals at the bottom and quick to lock in those profits if you're trying to, trade it. Probably continues to be a pretty fun place for the intraday players. But the swing traders, that volatility, we like a little volatility in our swing trades, but boy, there's some movement going on over there. So for me, at least, I'm going to just say we're smack dab in the middle of a range. Got a fairly good idea of what our short-term bottom is, our short-term top. Just going to let it hang around within that trading range. On the other side of it, we have silver, a little bit of selling, much like gold here today. Maybe it was because it was at this old trend line. Maybe it was just because. I don't know. I continue to maintain you leave silver alone at this point in time, at least directionally. A lot of junk, a lot of this, but it's got a higher low. But it's got, there's just so many buts when it comes to silver for me right now. The only clear thing I can see developing as of this very moment is the break of 1560. That's the only trade that I can see. Now, cash flow plays, boomerang style, if you're interested, still makes sense, on silver. But directionally, you are much braver, smarter, more aggressive, all of the above than I am if you're trying to directionally trade silver right now. Natural gas continues to give us our money's worth. Today, yesterday took a little run up. Today smacked right back down. We've got 1 day left. As of right now, we are still below that 50-day moving average. We on that weekly chart, of course, certainly something that we got to be keeping an eye out for. I would close not above the 9 as of right now. So as of this candlestick, downward movement below that low would be a pretty interesting sell signal in my mind. But we've got one more day, and it has been an epic battle. It really has. We've seen it all. So we will see where this one takes us, fighting the good fight. That is showing that there's some people willing to buy. I don't understand that. I could understand buying the break if I would just say it's aggressive, but I can't understand wanting to buy natural gas at that breakdown point /9 weekly /50-day moving average. But I guess to each their own. And lastly, over in crude, not much follow through here today, but holding the close above 60 for what it is worth there. Ideally, I'm not in crude. That was just a fast move. I do believe the break of 60 is a legitimate break, but I think ideally we get a little bit of a consolidation and then a break for that next leg. If it's going to run, I think has to run without me at this point in time. But if we can get a little bit of sideways action and then a break to the upside, could be something interesting for us here next week. So very unchanged, not a lot of follow through, a little bit of a doji day. Maybe we do need to see a little bit of a pullback. That would be okay as well. We've now kind of recaptured higher highs and higher lows. So a little bit of a pullback could be something we could talk about as well. So that is where we find ourselves. It was for a day that the Dow Jones hit an all-time high. And I guess that's why it seems kind of weird to me today. The Dow hit an all-time high, and it just doesn't really feel like it. You look at the charts, and it is the same cast of characters generally doing the same things outside of the healthcare stocks where you did see, tremendous movement both ways. For the most part, it just felt like a boring old day, and then you look at the Dow Jones, big green candle, closing at an all-time high, breaking a big round number. And you just, it feels like I would have expected more, I guess, is the way that it feels. It almost feels like a letdown type of a day. I don't know why it feels that way. It doesn't really let me down. It just kind of feels that way. Maybe it's because it's cloudy outside today. I don't know. But that is where we find ourselves, ladies and gentlemen. For me, kind of going into tomorrow, I'm kind of hoping for a whole lot of nothing. Just another kind of dull, creeping type of a day. I do think, keeping an eye, on that some of those that breakdown or breakout candidates. I really think Echo Labs and APD are interesting candidates going into tomorrow, as I would argue Pepsi is as well. Still have, Lilly. Certainly, there's other breakdown candidates out there. So I think that's kind of, my head will be kind of the same place as it really was going into today. Just kind of hope, you guys know me, all things being equal, I'd rather Friday just be a day to reset for next week. We'll see if I get that. Time will tell. So you can ask, right? You just can't assume that you're bound to get it. Before we wrap up here, anything you wanted to take a quick peek at? We could take a quick look at any stocks you guys do want to take a look at before I let you get out of here, while I let you throw any of those in there, because there's a little delay on my chat that I see here. Of course, as always, it is my pleasure. I thank you all for joining me live. Thank you for those of you who catch the replay a little bit later in the day. Always great to have you guys with us here as well. We do have the Cash Flow Club going on here tonight for our pro members. The Mystical Gino will be dropping some more knowledge bombs, so that is going to be a lot of fun for everybody. If you're not a pro member, you know the drill. We always invite you to head on over to tackletrading.com, email team@tackletrading.com, tell them Frank sent you. We'll get you hooked up with a free trial. You can get into that Cash Flow Club. You can check our reports. You can see all the fun things that we're doing over here. If you are new to the channel, of course, be sure to subscribe and hit that notification bell. Join us over on Tackle Trading at Twitter, Tackle Trading's Instagram. We've got, of course, you've got me at Frank Martin23 over on Twitter as well. Yeti here, Linda, a little bit of a runner. If you're not in Yeti right now, for me at least, I think you kind of have to let it go at this point in time, unless we try to play it off of some sort of intraday. At this point, I mean, maybe we could squeeze in on a short-term time frame and try to build a trade out along those lines. Just kind of thinking out loud here. This is almost how you have to, for me, this extended working into resistance would kind of have to use some sort of an hourly, support, 20-period moving average type of a deal to want to get in. Now, if I'm in Yeti, I'm perfectly happy with where I'm at, seeing a lot of momentum. Do want to keep an eye when we get to that 36 range. That is our high point, if I'm not mistaken, as a newer IPO. Yep, that is correct. So that's an important price point. If I'm looking at a Yeti as potential buyer, I'm either thinking I need a pullback and then another run, maybe a big old cup and handle type of pattern to form here, or if we're going to continue to run into that 36, let that break out be my entry point. So that's kind of how I would think about it. I don't think I'd feel comfortable even on the intraday taking a peek at that, because I do think you have to respect the heck out of 36. That is its all-time high. I think you have to assume that that's going to be a challenge. So even going to the intraday, risk to reward would be a tough place to be. Long term, I think I'm not nearly as much of a Yeti guy as maybe Coach T is, but I certainly have nothing negative to say about them. If they break that high, I think that's a very nice little signal to the bullish side of things. So long term, I'd be very interested in a little bit of a break, maybe the swing after that. Maybe I'm not a big, like I said, I'm not a huge Yeti guy. Maybe I will become one though. You never know for sure. But yeah, trail stop makes sense. It's always, if we're thinking about locking in profits, Linda, one of the things that you can do, or I like to do at least, is to kind of go in and kind of view what short-term averages have been, propping it up here. You can kind of see that we've really held that 30-minute, 20. All things being equal, I usually prefer the hourly time frame to the 30. That would make a sensible place for a stop loss, in my opinion, to kind of trail it up along below the 20. Sometimes the 15-minute 50 will be also something that we could do and play. You can kind of see that has been a support catalyst. So from a management on these things that really move, you could also look at the 5 EMA on the daily time frame. A lot of times that 5 EMA can be a little bit of a support zone too. So I'll kind of look and see what's generally how this particular stock responds to these short-term averages, whether it's a 5 EMA daily, 1550, 20-minute, 20, or every stock's a little different. Sometimes you'll look at the 30 and be like, wow, that just loves that moving average. So that can be a method to kind of distinguish maybe what would be comfortable for moving that stop loss from a trail perspective if you don't have another plan in mind. The world's best problem, right? We love we've got a lot of profits, things are running, still making higher highs and lows, a lot of momentum, and now we're just thinking about how to lock them into place. Another alternative, Linda, that I'm a big proponent of is scaling out of the trade and continuing to give it some room. We don't have to trail that stop loss up tight. We could lock out 30%, 50%, 75% of the trade, close it out, lock in the profits that way, and give it a little bit of wider berth with that trailing stop loss. That's certainly something I'm a fan of. It helps capture some of those bigger moves. I know not everybody likes that style, but I do like that personally. So, and thank you, Lauren, always my pleasure. You guys are the bomb as well. And then Beyond Meat here, again, same type of thing, nice momentum, not a lot until we work into that high. I don't think we have enough history, and we definitely have too much volatility in Beyond Meat right now. It's way too hot for me, Lauren, to want to touch. but it almost looks like a momentum type of a play where we could kind of use, again, intraday, that's how I would play, but we've got a little bit of a break. Other than this one tick up here that we had on that big gap, we're kind of breaking into some highs. That's certainly something that could be in play. Like I said, for me, this is not my kind of thing. I am by no means an adventurous trader. But I know that that is just me. And I certainly regret that, as I've seen overall how Beyond Meat has moved. So maybe if we can push through this on a momentum type of a play, looking into shorter time frames, other than that tick right up here, there really isn't a whole lot. We had a little tick up here on the intraday, little tick up here on the intraday. So I could see the argument for a momentum play on it, but I think that's how you'd have to play it, using some sort of, intraday momentum type of trading strategy for it. I'm way too cowardly to want to trade Beyond Meat personally, but I've also looked plenty dumb many times. But certainly there are some signals breaking resistance right here today. Taking out that intraday stuff could be helpful there. So yeah, I think there's easier things to go, at least from a trading point of view. So, and you are very, very welcome. And likewise, guys, thank you all so much for your time. I'll let you get the heck out of here today, but I will look forward to seeing you guys for the wrap up here tomorrow, see where it takes us. Hopefully, just a little bit more of the same. Some stocks move up, some move down. The market creeps to just, a little bit more of a high, and we have an easy go into tomorrow or into Monday's open. But we'll see if we get that or not. So on the earnings front, really not much of note. Infi is about the only name of any note coming out tomorrow. Not an S&P company, just an Indian company that is a larger cap stock. So beyond that, it's really pretty dull. One more day, and that's the last day in a while. Well, maybe Monday we won't be able to say that, but basically from here on out for the foreseeable future, it won't be boring on the earnings front. So thank you guys so much. Thank you, Emily. As always, guys, it is my pleasure. Thank you for your time. Enjoy the Cash Flow Club here tonight. We'll pick up same time, same channel here tomorrow. So enjoy your Thursday afternoon. Enjoy the Cash Flow Club. I will see you all tomorrow. Bye, everybody.